Hello and welcome to Halftime Report. Well, it's 12 noon. The markets have been very, very volatile on this Friday trading session. In fact, currently we're holding mildly in the green. I'm Nigel D'Souza and with me is Lata Venkatesh. Hi Lata, good day.
You could say with me is the standby anchor, Lata Venkatesh, standing in for the pretty Rima Tendulkar as she takes her annual holiday. Yes, actually, the market is looking for direction. We started off with a negative backdrop from Wall Street, but it got replaced by a somewhat green performance by the Chinese markets because their services PMI came in fairly positive. So markets at the moment actually trying to look for direction. So we have seen a great deal of choppiness. We also will be asking our guests for direction, not yet decided on whether we should end the day red or green. Headlines? Yeah,
first up, let's run you through all the top stories. Volatile day of trade on the Lal Street as the key indices, they flirt between red and green territory. The market trades in a tight band amid rising global growth uncertainty.
Rupee strengthens to trade below 70 against the dollar. IT stocks top the nifty losers list. TCS, Infosys, Tech Mahindra, HCL Tech, all of them lose between 1% and 2%.
And Tata Motors is among the top nifty gainers, while Tata Motors DVR gains in an otherwise tepid market. The JLR US sales come in higher by 24% for the month of December.
General temporary slowdown which we see, which will pick up in our view after the Chinese New Year.
Well, that's the word coming in from JSW Steel. The group head Sesagiri Rao tells CNBC TV 18 that domestic steel prices are now at par with imported steel. He adds steel margins will see a correction lower in the next 2 quarters.
And ahead of a crucial Fed chairman speech later today, Chris Wood of CLSA says that the monetary tightening expectations in the money markets have reduced considerably over the past quarter in response to the increasingly negative stock market action.
Well, so as you can see, we are looking at various trends. The commodity trends, which were down up until close of trade in the United States, have started improving a bit as Shanghai starts trading. So you got that positive comment from JSW Steel. But today, perhaps the standout performance is coming from the banking space. That index alone is about 0.5% higher. And it's both the private banks and the public sector banks which are doing well. If you want to pull up the Nifty Private Bank Index, that's up about 0.5% or 0.6%. But if you look at the Public Sector Bank Index, that's up over 1%, almost 1.5%. So basically, the banking sector is doing well, and we have a couple of reasons for that. So we start our movers and shakers segment with an analysis of what may be going right for the banking space. First up is the story that we broke yesterday. Our colleague Ritu Singh broke the story that bankers have written to the new Reserve Bank Governor Shaktikanta Das, listing out their grievances and demands. Ritu Singh, just give us the highlights of that letter once again.
Well, sources have told CNBC TV 18 that banks have written a letter to the new RBI Governor Shaktikanta Das on several concerns faced by the banking industry, and this letter was sent soon after the governor met with all bank chiefs in the month of December. Now, first, on the issue of the Feb 12 circular on bad loans, banks have once again requested that RBI do away with the one-day default rule and instead allow financial resolution to start only after 60 days. Among other things, banks have also requested that NCLT referral for initiating bankruptcy proceedings only happen after 60 days of a resolution plan failing instead of 15 days as is currently stipulated. Secondly, on the more important and pressing issue of the IL&FS group loans, banks have expressed concerns that lenders have so far been restrained from initiating any enforcement action for the recovery of their dues because of the NCLAT order, and that a substantial portion of the 60,000 crore exposure of the banking system to this group is at the risk of becoming non-performing if RBI does not intervene, and therefore banks have sought a standstill agreement or arrangement for these loans for a period of at least 6 months. Third, banks have also sought relaxation in risk weights for exposures to corporates and retail in line with Basel III requirements, which will allow capital requirements to come down anywhere between 25 to 40 basis points across banks. Fourth, banks have also sought a one-time restructuring relief for MSME loans, which we know RBI has now recently allowed. Also on the issues of ATMs, bank did seek various relaxations on cassette swap rules and the change exchange of EVM chip cards, etc. And we understand that RBI officials will be holding a meeting with the banking industry body IBA on the 17th of January to address some of these issues.
Okay,
I just want to caution that these are very big demands and we must not run away that all these will be granted. All
right, sticking with the banking stocks then, Nimesh is with us. He's bringing us some exclusive details on ICICI Bank as well as Axis Bank. The long-awaited money from the SR Rosneft deal is finally going to come to them, isn't it?
Yes, in fact, it has come to both the banks, is what I understand from sources, Nigel. So, what I've gathered is both ICICI Bank and Axis Bank, who are the Indian lenders to this whole SR oil deal, they've got the money in the December quarter. So, ICICI Bank has received close to $540 million as part of the SR Rosneft deal, and Axis Bank, what I understand from sources, got close to 600 crores as part of this whole deal. So, both the banks have got the money, is what I understand from sources, and given that both the banks had fully provided for these loans in the past, this will directly flow into their into the balance sheet and into the P&L in the Q3 numbers when they report later this month. In terms of responses, Axis Bank said they cannot comment on client-specific matters, whereas we yet to get a response response from ICICI Bank. So clearly, none of them have confirmed or denied the story, but I do understand from sources that both ICICI Bank and Axis Bank have got the full final payment as part of the deal which was between SR Oil and Rusif.
Okay, so that should logically reflect this. Everybody knew that the money had to come, but the fact that Nimesh is confirming that it has come for the third quarter indicates that there could be some relief for them in provisioning and therefore in the net profit as well. Okay, there are other stocks outside banking that are also buzzing in trade today, and Sonal Butra, our colleague, is here with the details of stocks that are in the news. Sonal.
Thanks a lot for that. And yes, I'll start with GM Breweries reported its Q3 numbers, which did not look very good, and that is why the stock is declining in trade today. Well, the EBITDA that declined around 27%. There was some pressure on the margins, also declined by 900 basis points, something that definitely is not taken very positively by the street. Other stock that is in focus is NHPC, because it has informed the exchanges that due to the shutdown of their Parbati power station, they have incurred some losses, and on the interim order, they have incurred a loss of around 24 crore rupees, and according to the final tariff determination by CESC, the loss is around 30 crore rupees. Power Grid is also in focus because the board has approved investment to the tune of 380 crores for 2 projects, so that's why that stock is buzzing in trade today. Edelweiss is also in focus because there are unconfirmed reports that Edelweiss AMC that has won the mandate to manage exchange traded funds. However, these are just reports and CNBC TV18 has not verified them independently. Torrent Power and CESC also in focus because they have won certain bids. Well, CESC has been declared successful bidder for Malegaon Municipal Corporation area, and Torrent Power has been announced as successful bidder for the Thane Urban Circle. So that is positive news coming in for both of them. And Tata Motors, that is one stock buzzing in trade today. Well, the company informed the exchanges about the US JLR sales that have come in higher by around 24%, while the Jaguar sales are up 1.5%. The Land Rover sales, that is up 33%. But remember, these only constitute around 10 to 15% of the total sales, and the main number that we'll be watching out for will be the China sales. So this is to be kept in mind before we consider the Tata Motors sale. In the broader markets, there are certain stocks that are buzzing in trade today. IDT Cementation, that is because there has been a large bulk trade that has happened on the stock, and the sugar stocks, they are also in sweet spot, up and buzzing in trade today. Back to you.
Okay, all right. Thanks so much for that, Sonal. Well, let's get in a sweetener today. In an otherwise wobbly market, we have some of these sugar stocks that are at least holding with some gains. Manisha is with us to run us through a few more details. Manisha.
Well, thank you so much for that, Nigel. Yes, there are a couple of things which have been supportive for the sugar prices and stocks as well. One, of course, is that the UP CM has written to the central government asking to increase the price of sugar. Remember, as of now, we are working with a floor price of 29 rupees per kg for sugar, which is lower than the cost of production as well. But at least there has been a floor. The sugar mills do not sell sugar below 29 rupees. Now, the ask is that it should be increased by 12%. That would come to 32.5 rupees per kg, which is a big positive for the mills because then they will be able to pay all the arrears. It is good for the farmers as well, for the industry as a whole as well, and for the consumers, this 2 rupees per kg in case of the ex-mill prices do not really make too much of a difference. And then in expectation that you will see an increase in the floor price of sugar, you already have seen a strong demand in last couple of days in the sugar demand itself, and we have seen the sugar prices gain up because of that as well. So it really is a two-way that has been supportive for the sugar prices and the stocks.
Okay, that is, thank you very much for that. So this is the demand for sugar support, sugar price support, but we will have to see what decision the government takes. The stocks at least are excited at this point in time. The set of stocks that are not excited, or where the bears are excited, are the IT stocks. Top losers. We can take your guess in terms of what the causes could be. The overall negative environment because of NASDAQ, or is it because there's a minor rupee strength also that could be working against them? Be that as it may, we invited a tech major, the management of Tech Mahindra, to ask them what is the situation. The Tech Mahindra CFO, Manoj Bhatt, was actually quite positive on everything, on pricing, on growth, as well as on margins. Hear him out.
From a perspective of pricing, I think first of all, I think the overall environment, I would say, is much better than what it was probably 12 months back. Secondly, as the business mix changes towards more digital, so for example, 31% of our revenues are coming from digital, which is typically a better price point than some of the traditional services. So clearly that mix is helping us improve price points over a period of time. And I think that I expect the next 12 months pricing to be fairly stable. Both Q3 and Q4 margins will improve, and obviously we have said gradually because we have had a sharp improvement. So I don't want to give a number per se, but clearly we are on track to achieve whatever we said. And going into next year, our effort would be to at least maintain, if not improve margins, whichever on a full year basis, going into FY20. From our perspective, I think we expect that whole drive towards more digital, closer to the customer, will continue. And as of now, when in all our conversations, we are not seeing any impact coming through on demand or growth rates into 2019 as we speak to our customers and talk to them about next year's budgets and the various initiatives they are pursuing in digital.
Okay, so that's Tech Mahindra saying that not to confuse the noise in the NASDAQ and those FANG stocks with the situation for Indian IT companies, which is largely stable, as he puts it. Okay, it was slow growth across the board for auto sales, but the big exception was Escorts, which posted a solid 21% growth in the domestic tractor sales. We spoke to Bharat Madan, the group CFO of Escorts, and he actually expects to do even better. He expects FY19 to end at a 20% growth. Hear him out.
This year, we don't expect it will be a very significant growth. So, but still, we're expecting it will be anywhere between 0 to 5%, 5-6% sort of growth, single digit can happen. So, overall, for full year, we expect the industry will still do somewhere between 10 to 12% sort of growth on a full year basis for FY19. For us, our growth has been obviously much beyond the industry numbers. So our growth so far in the first 9 months has been close to 25% compared to 13% growth in the industry. So we expect probably the momentum should continue to next quarter also. So I think overall for the full year basis, we're looking at 20% plus growth for the company in the volumes.
Here's a quick recap of all the top buzzing stocks we just covered from the banking space: SBI, Bank of Baroda, PNB, ICICI Bank, as well as Axis Bank. We also have GM Breweries, NHPC Power Grid, Edelweiss, Torrent Power, CESC, Tata Motors, ITD Cementation, and a whole host of sugar names like Balrampur Chini, Dampur Sugar as well. And finally, Tech Mahindra and Escorts. Well, on that note, let's slip into a short break. On the other side, we'll get chatting with the First Management. Hind Rectifiers, that's the stock in focus after they won an order of close to around 90 crores just yesterday.